Welcome, everyone. I'm very excited today to be with you as part of our series for the GC Summit with Cornell Tech and Cornell Law School. There will be more information about the GC Summit in the chat. Today, I'm joined by three stars. First, Nick Dorsey, who will moderate our discussion. Nick is a corporate partner at Cravath in New York. Nick focuses on representing corporate issuers and borrowers and financial institutions, lenders, and other parties in public and private offerings of securities, loan transactions, and other financing transactions. We are joined as panelists by Danielle and Renee. Danielle is the Chief Legal and Compliance Officer at Commvault. She is a strategic leader with deep experience managing complex global data privacy systems. Danielle has repeatedly scaled legal operations for public technology companies, led IPOs and other transformative strategic transactions, counseled lenders and boards on significant governance and shareholder matters. Renee is a multi-exit scale-up executive in legal, finance, and operations with a rare combination of startup, enterprise, and VC investing experience. Among other skills, he has substantial experience negotiating M&A and private equity transactions, and then integrating and scaling such portfolio companies. Renee is the former chief legal officer of a NASDAQ-listed biotech company. I am so grateful to the three of them for joining us today as part of our series of discussions with the GC Summit, and am excited to turn it over to Nick and hear what you have to say. As a reminder, please put your questions in the chat. We'll be watching for them so that we can address anything that comes up during the session. Again, thanks, and Nick, I'll turn it over to you.
Terrific. Thank you so much, Professor Eisen. Thank you, Renee. Thank you, Danielle, so much for your time today. I think just as we're getting started, for those of you who are joining us live today, if you wouldn't mind sharing in the chat box just maybe your industry and approximately how many years you've been practicing in-house, then Professor Eisen can share that information with us. And I think it'd be useful information as we try to tailor our conversation to be most interesting to all our participants. So with that, I'll go ahead and kick it off. So very happy to be joined by Renee and Danielle. Thinking about the topic of transactions, as an external lawyer, when I think about the start of a transaction, particularly a transaction that may be of a transformative nature, as an external counsel, I get a call typically from the general counsel or from a senior in-house lawyer, and they're feeding me some basic information about what the client's objectives are, maybe some of the issues that are on their mind. So even though every transaction is unique, the start of the transaction process looks fairly similar for external counsel. But I appreciate for in-house lawyers, the process can be quite different. It matters based on the size of the legal department, the nature of the transaction, and the like. And in certain situations, you may actually be learning about the transaction as a bit of a surprise, or you weren't necessarily part of that very early planning. And so I think I'd like to start the conversation there, recognizing that many in-house lawyers may find themselves in that situation. And perhaps we could go in turn, maybe Danielle, you could speak to an example where you were caught a little bit by surprise by a transaction, maybe a larger transaction, and how you thought about that process, how to get involved, how to get up to speed. And then maybe, Renee, we could turn to you and you could share a little bit about that experience, perhaps from the context of a slightly smaller transaction.
Nick, thanks so much. Everybody, thanks for having us here. I'm very excited to be here talking about this subject with Renee. We have a lot of complementary experience and a lot of experience that's a little bit different. So I think this is going to be really interesting. To your question, has an acquisition ever, surprised me? Has it ever gotten sprung on me? Yeah, I actually was in the process of taking a public company private. And by the time I got brought into the process, there was a lot of work that was going to have to get done that I hadn't been aware of. When two deal makers or many deal makers get together and they have an idea for the future of a company, they don't really think about involving their legal team yet. They're thinking about making a deal, and that's great. But when you're a public company and you want to make a deal to take it private, every single conversation that you had about, along that journey has to ultimately be disclosed in a public document. Every meeting you had, every phone call you had, what you talked about, what happened next, because it all goes to fairness in the transaction. So when this particular deal, when I got brought into it, it's not like I got brought into it late, but I got brought into it just late enough to irritate the CEO and CFO and the chairman of the board, who needed to go back through their calendar over the last 9 months and detail every single meeting they had with potential bidders and what was discussed and when and where, so that we could build a record of how we got to the point we got to for our shareholders and for disclosure purposes. So depending on the experience level of your management team, that may or may not happen. But the truth is deals happen without the lawyers at first, sometimes, oftentimes. And it's helpful. I learned a lesson. Now, my third public company, I'm always reminding my CEO of what has to become public in the event that he wants to strike a deal, so that he's thinking about this in the back of his mind. And now, of course, every single time that man has a phone conversation or a meeting, I get a phone call. I just wanted to let you know I had a call with so-and-so. Like, you don't have to tell me about everything in your calendar, but so anyway, that's my caught by surprise story.
No, that's great perspective. Thank you for sharing that, Danielle. And Renee, maybe thinking about a smaller transaction you worked on, was it a similar experience, different? What are your thoughts on that?
Yeah, sure. Thanks, and thanks for having me. I guess it totally depends on whether you're talking about the seller side or the buyer side, right? I have participated in, 2 major sale transactions, but dozens of buy-side transactions. And a buy-side, for the most part, if you're a very acquisitive company, you actually have a program and you get a sense of what's coming down the line as it relates to deals we're looking at, potential transactions, et cetera. So I haven't really been ever surprised on the buy side. And so the one transaction that I've really been surprised absolutely last minute happened to be in the sell side and happened to be quite significant, right? So when I was at AB InBev, I had joined literally 4 weeks earlier, and I got a call at 4:30 in the morning. And this is still the iPhones that, go into do not disturb mode, right? So they have to call multiple times to actually get it to ring and wake me up. And it's the, associate general counsel that had basically hired me and said, hey, I need you to look at your email and sign an NDA that I just sent to you. I'm like, why do I need to sign an NDA? Just go sign it and then call me back. And literally at 4:40 in the morning, I'm calling this guy back in Brazil, and he says, well, this is what we actually hired you, right? We're about to make a hostile takeover against ACB Miller, and we're going to have antitrust issues in half a dozen countries. We don't have the bandwidth. You're going to have to deal with the US side and come up with a mechanism to sell the Miller brand back to Molson Coors, because they have the current licensing rights that we know is going to be an issue. So we're just going to cave right away. But regardless, you need to figure out how to sell this and convince DOJ that that's sufficient. And so it was my very first rodeo into scrambling to sell an asset of which I knew nothing about for the most amount possible, because of course the less we get, then the more we have to borrow for the overall transaction. And so it went okay, but jumping into an already moving vehicle, right? Because just like Danielle said, they had been planning and they had been documenting properly, et cetera. But I had to scramble to everything from working on counsel to getting myself up to speed into how do you go through a process of that magnitude, et cetera, which again, keeps it interesting, but it's definitely not the best way to come in last minute into a massive transaction that has to happen in a very short order.
For sure. That certainly makes sense to me, Renee. Maybe a bit of an understatement. Certainly good to be in early. Terrific. Well, I want to transition to a little bit about board management, but I guess I'll pause for a second. Professor Eisen, any thoughts on the audience background? Anything to be aware of at this point?
Thanks, Nick. Yes, we've had a number of responses, and we have folks varying from a couple of years of experience all the way up to over 20 years of in-house experience. So we've got a broad range. If I had to guess around sort of averaging out, we're maybe in the 10 year range.
Terrific. Thanks so much. And thanks to everybody who were filling out the chat box. Great. So I'd like to turn a little bit to board management as another important transaction management matter for a general counsel or senior in-house lawyer. particularly early in the transaction, but then as the transaction progresses. I see part of the GC role as ensuring that there's really good communication going to the board of directors, but that's my perspective as an external lawyer. And I know there's a lot more that goes into making sure that the board members feel informed, have an opportunity to express their thoughts. So maybe Danielle, could you talk a little bit about what you see as your responsibility to ensuring that the directors are well informed and are functioning?
Yeah, Nick, this is a great question, because I think it separates the great legal leaders from the good or less good legal leaders. You can go into a board meeting and talk about the transaction and explain how difficult the negotiation was with indemnification, and nobody understands what you're talking about. Or you can do what I think are the three key things you need to do when discussing a transaction with the board. Number one, how does your board get excited about this? How should they be thinking about this? Now, that's a shared responsibility with the CEO, corp dev, CFO, depending on who's involved in the deal. But the way to think about this is the GC's role is to get the executives talking about it the right way for the board. What's the thesis of the deal? How will the investment be measured? What liabilities might this create? Just pick a couple of questions, and the management team needs to get on the same page and then explain that to the board. Why should the board be excited about this? That's number one. Number two, how do you protect the board's approval? The way I do that is I always show them the transaction document, but let's be real. Nobody's reading the transaction document that's negotiated by Cravath. That's not happening. So you need to provide an executive summary on top of that transaction document. What are the key material deal terms here that matter? And then I like to pick a couple just to be able to give the board confidence that I understand how this deal is structured, to explain one of the interesting things that happened in this deal is because we're, taking all of the IP, and the IP came from a company that we're actually not buying. We had to make sure we got assignments, and we needed deal protection, and just to explain some things that might be particular to the deal. So two, how do you protect the board's approval? And number three, what is the IR PR story for the deal? Why should investors and customers care? And this is my favorite part of what a GC does for a board, because this is where you get to ask your board for help. I don't like to work with my boards as if they are the supervisors, micromanaging management. It is a great role, and it requires everybody to show up and do some work. And this is where they earn it. So here's my story on what I'm taking to the market. Here's my story on what I'm taking to investors. Does it work? Give me some feedback. How would you tweak it? And so those are the three key parts, I think, where the GC has responsibility in a strategic transaction with the board.
That's great, Danielle. I particularly like the third point of making sure that you're getting all the input from the directors and their value add. That's a great tip. Renee, slightly different question for you. As I think about transactions, whether they're M&A transactions or an IPO or capital raise, I tend to think about transactions that are what I'll call management initiated. So the management is kind of the driver behind the overall transaction. But it's also the case sometimes that a director is really the impetus for a transaction, or maybe a large investor is the impetus, makes a proposal for a transaction. And as you think about board management and some of the techniques and tips that Danielle was offering, do you think the way that the role of the general counsel in working with the board is the same, kind of no matter what the genesis of the transaction, or do you approach things slightly differently depending on where the transaction came from and any kind of related considerations?
Well, it's definitely differently if the transaction is coming from a director or a large investor, right? No question. I mean, number one point is what Danielle alluded to earlier in terms of if you're a public company and you even consider going private. I hope you actually went through the training session initially, at least once a year, to tell the board members, you must talk to me right away. But otherwise, even if you're not a public company, and regardless, it's not going private, I would say that the moment it's an investor or a director bringing up a potential transaction, I think there's a few things you have to do, right? Like one, I would say is you need to make sure that from a management perspective, you in fact want to pursue this strategy, right? Oftentimes you'll have a director or a large investor that simply wants to pursue a transaction because they may be beneficial to them as it relates to their own, other portfolio company or some other, private equity fund strategy. But you really need to dig deep and think about, as a management team, do we actually want to pursue this strategy because it may be not the right approach, in which case you may have to play the diplomat and try to go back to that director, that investor, and say, this is an awesome opportunity. In fact, we're going to pursue it, but we're not convinced. We'll see how this plays out, right? Also, I would say that just because one investor or one director brings it up doesn't necessarily mean that the rest are aligned. And at least I found myself to be in this situation again as a diplomat, where you have to go and have multiple one-on-ones with each director to truly get a sense of where they stand as to whether it's a good idea, they will be supportive, do they believe in this new strategy potentially, or having to go through this integration. Because particularly in private companies, you may have boards that are, very open, but also there are situations where you have, competing investors, right, competing directors that may not necessarily, be super public about their commentary, but are not truly supportive, and then simply try to find a different way to kill a deal, let's say, not necessarily in the boardroom. So I never like being surprised. And so I then spend up a lot more extra time discussing, again, with the management team and individual directors about whether or not this is the right strategy and whether or not they're supportive before truly spending time with the deal itself. And obviously, again, conflicts of interest, special committees. Now you get into the actual nitty-gritty of, do any of these things apply? Again, depending on who brought the deal and how you have to, go through the proper governance procedures to approve the deal.
That certainly makes sense. There may be the particular nature of a transaction or parties involved where you need to follow a particular set of procedures, or bring additional advisors for specific parties and like that. Certainly is great advice, Renee. I guess building on your concept of the diplomat, who do you think of as the key stakeholders when you're working on a transaction? You're the general counsel. Is it clear that you're kind of working for the board or the CEO? How do you think about who are your stakeholders and how you actually get relevant input so that when you're the diplomat, you're kind of moving in the right direction?
So I think it depends again, right? I mean, if you're a buyer, for the most part, you have, a program to acquire a bunch of companies. So you generally talk to the board on a quarterly basis or monthly basis, that they know something's coming. They have given you a delegation of authority for certain limits. And so you're really talking to the internal management team, corp dev team, and or generally, again, like, what is this particular transaction about? Is it all about the people? Is it about the IP? And so you'll bring in and out different functions within the company to make sure you're successful. And otherwise, again, strategize with your management team, inform the board, right? I think it's very different if you're a seller. If you're being a seller, of course, then now you have to be a lot more careful and have a lot more support from the board directors as it relates to like how exactly you're going to be pursuing this transaction, the structure, economics, and all kinds of other things that ultimately they will have to decide. And so again, in that situation, I think together with your CEO and CFO, you're probably a lot closer to the board and having a lot more frequent conversations about how a particular sales process is developing. I think that's the way we think about it.
Yeah, let me build on what
Yeah,
Renee said. I think what he said was so important. He said, well, it depends on the particular transaction, right? So I like to think about, where can this deal break? What is so critical to this deal that it can break? And a lot of the deals that I've done in tech deals, it's usually the software, it's usually the code. And so one of my key stakeholders is always going to be the person doing the code review. Always going to be the product leader who says yes or no on the deal, because either the product works or it has so much technical debt, it's going to be a problem. That's number one for me. And then who's the deal sponsor? The question that you had asked Renee about, what if it's a large investor or director, you want to be side saddle with that deal sponsor, because you might need to play that card a couple times to get people back in line. And then a third idea is, who is your toughest board member? They usually sit on the comp committee, by the way. And, when you bring, updates to the board, your toughest board member, you almost can write the script for what they're going to say. And so you need a strategy to make sure that, you can use toughest board member as a proxy for toughest management member, something like that. But in that case, I like to pick up the phone and call. I never want to send an email and just wait for a missile to come back at me. So pick up the phone and call and say, this is what we're thinking about, and I'd really love your feedback. Here's how we're thinking about it. Here's where we think some of the risks are. What do you think? And something as simple as that and making them part of the solution can really head off criticism, which can derail a deal.
Thank you, Danielle, for sharing that. And we have a related question with from the audience here. So both of you have spoken a bit about working with the CEO and the board very closely, maybe a particular individual, lead the chair or the lead independent, whoever it may be. Just taking a step back, maybe as you've joined a company relatively early, are there any tips you would offer in terms of how to really form a trusting or long-lasting relationship for those types of board members or executives for either of you?
Sure. I guess I'll go. So I would say, again, private and public, different situations. I'll start with perhaps private. In a private matter, in a private company, oftentimes, the CEO has strong feelings or not about how board meetings are run. They may have, they feel they have a direct relationship. They talk to the board members, perhaps they selected them, right? If it's a, VC-backed company, they had a say on, who a venture capital investor had to appoint. If it's a private equity fund backed company, not necessarily, but potentially. And you need to first gain the trust of the CEO, and make yourself useful and valuable during, board meetings before you almost, I would say, get, his or her permission, let's say, to start talking directly to board members so that the CEO doesn't feel threatened by your communication with board directors. I think that's slightly different in a public company where public company CEOs are a lot more accustomed to the general counsel or CLO truly driving a lot of the procedures related to a board of directors meeting. And it's a lot, more understood that you will have direct contact with a lead independent director, the audit committee chair, et cetera. And so again, you still have to obviously gain the trust of the CEO and the rest of the management team, but very quickly assert yourself as, this is the process we're going to follow. This is how we're going to set up agendas. Let's you and I, you CEO, we're going to meet however often you want to set the stage. But then I need to be able to communicate with all the committee chairs. I need to talk to the independent director, and this is how generally I would run my calendar for the year as it relates to like all the things that a public company needs to accomplish. And so coming back to the private company, I think this is where you need to have the tact and the EQ and the relationship building and the trust development to truly gain the trust of your CEO and show him or her the way, right? Show how you can help them gain leverage by you starting to take direct action with the board directors and driving some of the agenda without them having to be constantly involved. So they can actually be out there selling or setting strategy as opposed to like having one-on-one calls with directors to update them on particular things.
Yeah, I agree with Renee. And to provide a little detail about how I do it, one, as the general counsel, generally you're helping the chairs of committees run their agendas and their committee meetings. That is an incredible opportunity. Don't squander it. I set up quarterly meetings 4 weeks in advance of the committee meetings. I prepare an agenda for the chairs. I prepare a slide deck for the chairs, and we go through it. And I say, what's on your mind? What are you hearing from other boards? And then I let them present the deck. I mean, I encourage them. I enable them to use that deck at their committee meetings. And then instead of me updating the board about what happened at committees, the committee chairs update the board. They're empowered, they're enabled, and they know exactly where all that work came from. So that is building a relationship of trust, and it's giving you reason to talk to them on a quarterly or more basis. So that's number one. Number two, there will inevitably be people on the board that you like, that you just gravitate towards, that you have a connection with. You want to find your people, because these are folks that could mentor you, that will end up being referrals for future jobs or referrals for future board seats. So find your people and build a relationship. There are a couple of board members at each company that I've been at that I like a lot. We have a lot in common. And so when we have to go dial for votes, right? We all pick out of a hat who we're going to dial, right? And I pick my guys because I formed a relationship where they can talk openly and candidly with me. And it's less of a formal call. The third is what Renee was saying at the end, which I think is so important. Make sure you update your CEO on every conversation you have, every meeting you have before and after. It is so critical. And the reason it is critical is because as GC, you work for the CEO. You don't like it, you have one option, leave. That's it. That's the job. Yes, we have to report out to board of directors on matters of ethics and other issues, but there is no choice here for the GC to do an end run around of the CEO. It is a disaster for our company. So you work for the CEO, you got to respect that. And in my experience, the board respects general counsels who are loyal to the CEO that they have chosen to run the ship.
Thank you both.
And I'll add this one, I guess one more thing, because again, I actually don't know if the audience is mostly public or private. So let me just throw something else in the private company
the chat box
perspective. Many private companies are set up from a governance perspective to, have all the bells and whistles, but don't actually execute on them. And so there are a lot of private companies out there that are quite big, but don't actually have committees, right? And then are not actually having, the true, quarterly meetings. They meet whenever there's an issue. And so I think as a general counsel, one of the best things you can do is slowly but surely start bringing to bear your experience to push for, starting to act as if you're a public company, right? To start to actually have committees, even if you start with the first one as an audit committee, for example, and to slowly but surely educate all the board members on how you should operate as if you're a public company. Because again, oftentimes quite large VC-backed companies and PE-backed companies have directors that themselves have not necessarily been public company directors. So they may not even have gone through the experience, even though they're very successful investors and very successful, business executives. And so you need to drive the sophistication of the board slowly but surely. It takes time. And again, it's about developing trust and showing little by little what it could be like if you started, using some of these procedures that are used in public companies.
Thank you both. Very, very helpful and very practical. Building a little bit off of that, Renee, as we think about the role of the general counsel or in-house lawyer that's working on a transaction, part of the communication that you're having with your CEO, part of that communication you're having with the board is around risk. Might be litigation risk, it might be the risk of the deal not happening, other sorts of risks. And so I imagine an important part of the job and being successful is helping to ensure that your audience, whether that's the CEO or the board or someone else, another decision maker, is receiving that advice in a way that is constructive and they're seeing you as a value add, right? I think you're both speaking about being able to empower decision makers, being able to provide substantive advice to those decision makers that then empower them. So any advice that you have for case examples of situations where you've had some risks on the buy side or the sell side or other transactions, and you've tried to convey that risk in a way that was appropriately deliver the how significant the risk was, but was in a commercial way?
Sure. Easy question, huh? I mean, the simple answer is always that everybody knows is you have to come up with a solution, right? You can't just bring problems. You have to bring solutions. So the question is, what kind of solution are you bringing if in fact there's even a solution to be provided? And I would say, I mean, there's a few transactions that I've been involved in where things come out of left field and you have to figure out again, like how to present the situation and, properly assess the risk so you can give an idea of magnitude and probability, and then come up with, potential solutions, whether they're, structural, economic, or, run for the hills and vote for, killing the deal. At a situation, for example, when we were acquiring a brewery in Belgium, where we did not think that it would have an antitrust issue at all. It was a tiny transaction, very, very small. It had a single, call it brand, a single beer, but it turned out that it was extremely famous, and the authority in Belgium thought that it would be a disgrace for AB InBev to buy such an iconic, brand for over 500 years, triple Carmelite. And so we got an antitrust lawsuit, again, out of left field. We had no idea it was coming. And so after I had presented multiple times, like, this is a done deal, it's going to be so easy, it's tiny, don't worry, we don't even have to file. Of course, now I have to go back with the tail between my legs and say, guys, we have a problem. We have an antitrust lawsuit for this tiny transaction. So obviously right away, first you have to communicate, early and often. And again, either share your assessment of probability and magnitude of the problem and come up with a solution. In that particular situation, we ended up discussing, again, are there any settlements as it relates to marketing and procedures, distribution, other things from other sides of the business, just so that we could actually close on purchasing this brand. But oftentimes, as it relates to just significant transactions, you end up negotiating on some sort of indemnity, earnout, holdback, or again, some sort of financial solution. And so long as you're very good with structuring or working with your outside counsel to think about good structures, everything is almost solvable financially. In smaller transactions where there's not enough economics to actually do that, again, that's where you have to get really creative and start throwing off some other potential solutions that may be peripheral, like we did in this transaction. So we bought this tiny brand, but we actually ended up committing to changing some behavior in our distribution and economics, how we deal with distributors in Belgium, which is a totally unrelated issue, but we had to pay the pound of flesh.
There's one other thing you can do, and I learned this from Renee. Renee and I are like best GC buds, okay? We learn a lot from each other. So the last company that Renee took public, one of the things that we were talking about at the time was sort of this exact situation. There was a situation where he had to explain risk, but put it into business terms, and people had to get everybody on the same page. And one of the things we were kicking around, and Renee, you threw this out, and I thought it was so brilliant, and I've used it so many times. What's the foul? What's the foul if we get it wrong? Sometimes there isn't a solution. Sometimes the solution is you got to be okay with the risk. And the foul isn't that great that we're not willing to take the risk. And I've used that a bunch of times. So
thank you so
that's
much.
Reneeism.
Yeah. Terrific. Well, I want to make sure we have a couple chances to share some more stories, and I've got some other questions that I think the audience will find interesting. But I'd like to talk a little bit about a war story example where there was a breakdown in a transaction, and the two of you were working to try to resolve that issue, right? To keep things on path and to get to a successful signing or successful closing, as the issue may be. So two observations that I see as outside counsel. I'd love to hear your perspective. I'll start with you, Renee. Could you give an example when it appeared to be the case, maybe there was an in-person meeting, maybe it was a Teams, Zoom, whatever, and there appeared to be a meeting of the minds. People knew what was going on, and we were ready to move ahead on a particular issue. And then when it became time to putting pen to paper, or it became time to work with outside counsel, or whatever it was clear to you that was not the case, right? There was not a meeting of the minds. Anything like that come to mind? And was there anything that you did that tried to help keep things back on track?
Yeah, I mean, I think that happens often, right? In every transaction, people seem to have short memories, and by the time you leave the room and then you get a draft back, things are quite different, right? So I don't really find those situations that interesting. Obviously, you try to either remind people of what you had agreed to, and or suggest you have another conversation. And in fact, depending on who your principals are, right, like your CEO, corp dev person, whatever, you can choose as to whether or not to get them involved, because they could actually help diffuse the situation, right? Sometimes the outside counsel on the other side could be attack dogs and try to play a big game, trying to do what's best for their client. But the moment you have principals in, they tend to calm down and be a lot more reasonable as opposed to yelling and pounding the table. So if you have a good, even-keeled, calm principal, that's great. Obviously, if you have an emotional principal, you do not. But I think I've had some crazy situations, not so much because of the other side changing their mind, but internal stakeholders changing their mind. I don't know if Danielle, you've had this or others, and again, it's not quite the question you asked, but I had two crazy situations come to mind. Like one was at AB InBev, we bought this one company called Babe Rosé, and we have very strict marketing guidelines, the marketing code. And Babe Rosé, I don't know if you remember, this is 5 years ago, it was huge. It was the brand launched by the Fat Jew, which is a comedian. And this guy broke pretty much 100% of our marketing guidelines every single time he spoke. And we sat at a meeting. This is going to be an incredibly successful transaction for them, financially. But we explained, like, we're buying your company, but things are going to change a little bit. You're going to have to control yourself in a certain way. And so we want to review your marketing materials before you post on social media. We want to do these things. We want to do this, those things. And they were like, of course, no problem. This is amazing. You're going to give us, global distribution. We're going to make so much money, whatever you want. We signed the deal, and literally things are going bananas in terms of continuing to do all the bad things they're not supposed to do pursuant to our marketing code, right? Our ethical code. And so it was very difficult to deal with that operating covenant and explaining to them, like, you can't do this anymore. And they kept doing it, right? And the flip side of that, again, now internally, we were going to buy a spirits company. And this was going to be the first time ever that, then AB InBev became a true, total alcohol company, because we had already acquired a wine company, and now we're going for spirits. And we were about to sign, and this was just, again, very big company, lots of procedures, actually sign a delegation of authority, piece of paper. So we're in the room in London about to sign, and someone says, well, I have reservations about getting into spirits. And you're like, what? We've been working for months on this massive transaction, and a director is like, I'm not sure we should go into spirits. And so that was a huge scramble that took 48 hours to calm board members down. And obviously the company that was going to sell to us got very concerned. And so you can try as much as you can to set your ducks in a row. You can try to avoid, again, the other side of having a meeting of the minds, but internal meetings of the minds are also a challenge. And the more you can do to be 100% sure that everybody's aligned, it'll serve you well.
Thanks, Renee. Danielle, any examples you'd like to share, either for maybe an internal misalignment or the principles on the two sides weren't aligned?
Sure. So don't lose sight of life and the fact that a world exists outside of the details of the deal you're trying to get done. So we were buying a U.S. public company with operations all over the world, Israel, Australia, UK, whatever. And we were buying a company in Lebanon. Great. So after the deal closed, we wanted an all hands call with everybody in the company. And the night before, the answer was, we cannot get the people in Lebanon on the phone at the same time as the people in Israel. I'm like, why not? I was like, well, because they'll get reported in Lebanon and they could be in a lot of trouble, like jailed, because they're not actually allowed to be on calls with Israelis. I'm like, no kidding. Who knew? So we had to have 2 different town hall meetings, and we had to figure out internally how the teams were going to be able to communicate and work together when the Israelis and the Lebanese were not going to be on the same working groups together. Totally missed that as you're getting a deal done. So those kinds of things are curveballs.
Absolutely. For the cross-border dimensions, cultural dimensions. Thank you very much for sharing that as well. So transitioning a little bit to some other skills that are, I think, really important for the general counsel to really help get a transaction complete. I think there's the concept of signing the transaction or announcing the transaction, and that's really exciting. There's also maintaining the level of confidence and composure that you need to actually see the transaction through all the way to completion and beyond. And I think, speaking for myself, speaking for a lot of lawyers, I think it's in our nature to second guess our own decisions from time to time, right? There's a close calls, and we're in the nature of you exercising judgment, making close calls, but we don't get everything right, and there's always a question in your mind of second guessing. So, any tips that either of you have that you've utilized either in your own career or maybe offer to others that are working for you on how you maintain that appropriate level of confidence, right? And when you make a decision, you're well informed, but then you have the composure to be confident in that decision and moving forward, and not being paralyzed by kind of consistently looking back to earlier decisions on a transaction. Any thoughts that either of you would like to share on that?
I think you got to stay focused on the goal. So a transaction can be very quick, or it can linger for quite a while. What I like to do is write down what the thesis is of the deal. And I like to put it on a Post-it right on my screen, so that when you go through the roller coaster of emotions in a deal, whether because, some nascent point is being negotiated within an inch of its life in a deal document, you have to stay focused on what the greater purpose is. And when you get to the ends of the negotiation and you've got an issues list and it's 10 points long, you have to look at what the purpose was and the goal was of the deal, and then marry it against that list and say, can I live with this? Anybody can sue anybody for anything at any time. So that's not a reason not to do a deal. And don't change your goal in the middle of the process. Stay focused.
Thanks a lot, Danielle. Renee, anything you'd like to add?
I'll throw something random that an investment banker did once, and I thought it was both crazy and brilliant. That is, he scheduled a closing dinner when we had not even signed a transaction. I said, "Are you out of your mind? You're gonna give us bad luck. You're gonna jinx us." And he said, "No, these things are not moving quickly enough, and we're gonna start putting pressure." Again, there's always all kinds of false deadlines, but if people see the light with some big, celebration, this is not just any closing dinner, right? It's like, a huge crazy party flying somewhere, etc. People will start focusing on trying to meet deadlines to get us to that particular celebration on time. And again, it sounds silly, but sometimes it works, because people definitely thought, oh wow, if we're all going to fly down to Miami on X date, then we need to close, X minus 1 at least. And that means we need to sign, X minus 31 at least, etc. Anyway, sounds silly, could work. And otherwise, as it relates to deal fatigue and or sunk costs, right? Sometimes people start losing sight, because again, if a deal drags, some people lose interest. So obviously you need to try to sign it as quickly as you can. Once you're signed, it's a different ballgame about the operating covenants and getting through antitrust or whatever other concerns. But in terms of getting to sign the deal, I would say that every once in a while, to the extent that things are dragging, you need to reconnect with the management team and board and say, do we still want to do this? Do we care? Because at some point you may want to pull the plug. It's, someone has to be asking that question. And for the most part, it's going to have to be you, the CLO or the GC. If you let something continue to roll down the hill just because no one stops it, you can end up with a disaster. Again, that could have been avoided, but no one thought about actually stopping the boulder was rolling down the hill.
And Renee, I know you recently worked on an IPO of a company. So that's a transaction where there's a long lead time, but it's not related to people not moving quickly or not making decisions. It's just a long process. Is any different advice or anything additional for keeping, for example, your team motivated when you just know it's going to be a 6-month process and you got to just kind of keep moving?
I think it's about having the intervening milestones and then either celebrating them or at a minimum, really having a calendar with checklists and particular things you're trying to accomplish, so that each time you hit that goal, whether you go out for lunch or a drink, at least you say, we just, we're past this milestone. We're now going for the next one. I think also figuring out who are the players in and out in particular pieces of the transaction could be very useful, because particularly in long transactions, you don't have to do everything all at once and burn everybody out at the same time. So you can cycle through people or focus on different areas at different points in time. And that way people get mini breaks before they get engaged again in the transaction. I find that's very useful because, if you're focusing on the financials, you can, leave HR and, other people alone for a while before you come, back to them to now deal with, other sections, for example, of a document, like, the compensation area and, disclosing compensation policies, et cetera, et cetera. So like, try not to burn everybody at the same time.
That makes sense. And Danielle, I know you've sold a couple different companies. Anything different or anything you would add from the perspective of an M&A transaction, maybe compared to the IPO example that Renee was offering? Oh, I think you're on mute, Danielle.
Sorry. In an M&A transaction versus an IPO, I would say your outside counsel is a critical partner. And sometimes you don't always have the right one. It's got to be the right outside counsel for you. It's got to be the right outside counsel for the board. It's got to be the right outside counsel for the team. And that takes many, many years to get right. I have done deals with outside counsel who have almost killed them. And I have done deals with outside counsel who can do a public company transaction in a day. So, getting that right is super critical to success.
And there will be times in your career that you will have to fire outside counsel mid-flight. Doesn't happen often. Don't recommend it. But at some point, you have to, rip the Band-Aid. And I was in a transaction where, like, it wasn't even me. Like, the CEO and the board, we were in a meeting, and they said, "This is just not working. Like, you're out of here, Renee. Go find someone right now and pick this up." Outside counsel is critical, and if it's not the right one, you may need to find a different one.
And Renee, do you think it's transaction specific, or are there a couple things that are, you look for in a firm, no matter what the transaction is? Big deal, small deal, capital raise, like certain responsiveness. What are the things that you think are important for people to look for?
So I have fired counsel twice in my career, and I'll tell you both situations, right? Like, one was about, I'll call it lack of context. That is, if you're doing a $500 million transaction, you go at it hard, you turn over every rock, you make sure things are correct from a diligence perspective. If you're doing a $50 million transaction, legal can't stand a $5 million bill. That's just not acceptable. It's too high a price for doing the legal processes for a transaction. And so, for being a very acquisitive company, right, doing transactions, every other month, if you're going to play with us, you have to understand the basics of the game. And so we do one transaction, get a massive bill. People say, like, "What were you thinking? Clearly you're not the counsel for us, so you're out." And again, that wasn't even me. That was like, the board saw that and said, like, "This is insane." Okay. And again, I think it's lack of, context, understanding. Like, they should have known, like, it's a small transaction. Let's focus on the things that matter, and, structure and, box the risks so that it doesn't come back to bite us, as opposed to spending, thousands of hours that did not matter and did not affect the outcome. Right. And the other situation is one in which, firms are just people, and you can have a brand name firm, but if you don't have the proper human representing you, you're still not going to get the best advice or the best outcome. And so we had a firm where, in order to complete a transaction, it started getting a little sophisticated. And again, we were in a board meeting, and I started talking about a potential, synthetic credit facility, and the partner was just like, deer in headlights, had no idea what I was talking about. I tried to explain this structure, and other board members got it. They're like, "This is brilliant. Let's do, this. This is how we're gonna, we box the issue." And the partner didn't quite get it quickly enough and just lost a lot of trust. And so the moment the board directly at a board meeting sees their head outside counsel speaking and kind of lose trust, it's over. It's done, right? So again, the moment that person left the room, I was instructed to be like, you need to go find new counsel and do your idea. And again, that was that.
I'll add to that.
Yeah, go ahead.
I think doing deals is so much fun. I love doing deals. You're building something new. I love doing deals with founder-run companies, and I think the tone of doing a deal with a founder-run company is completely different than doing a deal with a professional management team or that is a carve-out from a PE. I have also had to fire outside counsel, and it is not fun, but it is one of the things that come with the responsibility of the job. In one of my situations, our outside counsel was negotiating the deal not in a fun way, not like we were building something better together, but to get every last negotiation point. It was really pissing off the other side. And we'd start calls where it was like, well, we have a big problem. And, the 10th call that we have a big problem, everybody's exhausted. It's not a happy place. And there really aren't that many big problems, actually. You get like maybe 1 or 2 chances to play that card. The counsel on the other side was so great, so diplomatic. Every single time my counsel put up a challenge, and I'm like cringing in the background, this outside counsel was like, all right, we're gonna fix this. We're gonna handle this. We're gonna work on this together. Never rose to the occasion of the challenge that my outside counsel was setting to create this disparate tone. After that deal was done, I hired that counsel.
The other side, right?
The other side.
So
that counsel has been one of my on my deal panel team for the last decade.
Well, I appreciate all these tips. I'm filing all these away. I'm making mental notes of all these tips. So thank you, Danielle and Renee. I have one last question for each of you as we're beginning to get close to time. And this is lessons that we've learned from deals that weren't successful. The goal, obviously, of today's session was around tips to get to a successful closing. But inevitably, there are broken deals, and they can occur at different points in time. And so I was going to ask each of you if you could share an example of a deal that didn't get to conclusion, and anything that either taught you in terms of how to approach transactions, or that might be a learning point for our participants today. Maybe Renee, I'll start with you.
Sure. I think a big lesson that I got at a broken deal related to the internal team, and how, again, depending on your company, you may or may not have functional leaders that are transactional in nature. And so you could have a head of HR that has never done a transaction in their life, right? Or even a CFO that hasn't actually ever done a transaction in their lives. And so we had a broken deal, particularly because various functional heads didn't quite do what they were supposed to do the way they were supposed to do it. Communicating correctly, shared, information that they shouldn't have, at least not at the right time. And things just went sideways as diligence was occurring on both sides for a merger. And eventually we weren't able to push things forward because things just got weird, I'll say. And that was a big light bulb for me. So now every time we're about to start a transaction of any kind, and generally if I join a company and I meet with one-on-one with all the different functional heads, I make sure I understand how much do they know about transactions. Have they done one before? How many have they done? What type of transaction? And then otherwise, even though people will say, oh my God, I'm amazing at transactions, I have a deck, I have a presentation. I go through a training session basically on doing deals for my management team, and then separately do it again one-on-one with each functional head, talking about this is what may happen when we have a deal as it relates to HR. You have to be careful on points like A, B, C, and D, because if you do X, things might go sideways. You got to wait for me to tell you to bring that up, etc. And I just try to make sure that everybody's really on the same page and know how to act together. Because again, it could be out of just just ignorance that people do something that could really throw up a transaction.
Thanks, Renee. I'd love to see that deck, by the way.
Sure.
Danielle?
Sure. So when you have a busted deal, which can always happen, I think there are a couple of things that you can do along the way to make it easier to absorb. Number one, nobody should have just one horse in the race. You should always be betting on a few, right? And so talking to the board, not about falling in love with this deal, but understanding what we're trying to advance with this product's capability or with these sorts of people, or I'm trying to get into this market in this, part of the world, so that you have lots of options. And at the end, if you end up in a busted deal, you can explain this one didn't work, but there are other options out there. Number two, it is an opportunity to showcase management's thoughtfulness, to say, we worked really hard on this and we don't think this is right. We do not think this is right for shareholders. And here's why. And so we spent a lot of time on this and we spent a little bit of money, but we're recommending not to move forward based on what we learned. And I think that that can generate a lot of respect and good reputation for a management team. The third, which is really important, in order to do that, you have to communicate often along the way, because if the board or the CEO has heard nothing about deal progress, and in the end it's like, look, this didn't work out, that's like a shock to the system that's very difficult to absorb. So, go no-goes all along the way, high level business risks or opportunities along the way. And busted deals can sometimes be a blessing in disguise, and framing it appropriately can be just as much of a win for the business.
Great advice. Well, thank you, Danielle. Thank you, Renee. We're just coming up back on time, so maybe I'll hand it over to Professor Eisen for any final remarks.
Thank you so much, Nick. I just want to say thank you to you and Danielle and Renee for the great insights you offered today. I certainly learned a lot and filed away a number of tips from both Renee and Danielle's comments. So thank you. And thanks to everyone in our audience for joining us today. And check out the GC Summit if you liked today's content. It was, great. And I appreciate everybody's time. Thank you.
Thank you so much. Take care.
Take care.